Hello and welcome, dear traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is February 9 and we're starting from analysis and trading tips for GBP USD pair with Jakub Novak. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. Pound tested 1.2063 when the MACD line just starting to move above zero, which was a pretty good signal to buy. This resulted in an increase of about 40 pips. Meanwhile, selling on a rebound from 1.2108 took 20 pips off the market. No other signals appeared for the rest of the day. Key event for today is the Bank of England's monetary policy report, as the speeches of members will be decisive for the future direction of pound. A dovish stance will lower demand for the currency, while a hawkish stance will prompt a further increase in price. In the afternoon, the US will release its weekly report on jobless claims, but it's unlikely to lead to significant market movements. Nevertheless, good figures could have a positive effect on dollar. For long positions, you can buy pound when the quote reaches 1.2114 and take profit at the price of 1.2160. Growth will be possible if the Bank of England remains hawkish on its monetary policy. However, when buying, make sure that the MACD line is above zero or is starting to rise from it. Pound can be bought at 1.2074, but the MACD line should be in an oversold area, as only by that will the market reverse to 1.2114 and 1.2160. For short positions, sell pound when the quote reaches 1.2074 and take profit at the price of 1.2023. Pressure will return if the Bank of England announces that it's time to quit raising their rates. However, when then selling, make sure that the MACD line is below zero or is just starting to move down from it. Pound can also be sold at 1.2114. But the MACD line should be in the overbought area, as only by that will the market reverse to 1.2074 and 1.2023. If you want to catch the correction on Nasdaq 100, the next focus is for you. Area of Markmore would help us. As we know, the price movement on the 4-hour chart, the Nasdaq 100 index is still in a bullish condition, where all of these can be seen by the price movement moving above the moving average and in the channel that is swooping up. But with the appearance of the double top pattern in the form of the bearish 1, 2, 3 parting, given a hint if in the near future there will be a downward correction to the level of 12,411.8. If this level is successfully broken down, the NDX has the potential to continue its downward correction to enter the level area 12,285.6 and 12,155.2 as the next target. But if it's on its way to the target levels that have been mentioned earlier, suddenly the ANDX reverses towards its previous bias, especially if it breaks above the 12,783.9 level, then it's very likely that the downward correction scenario described earlier will become invalid and automatically cancel itself. The next in line is Larry Bailey with USD GPY focused. As you can see on the daily chart, the MACD line is a difficult resistance, and the price is trying to fight it for the fourth day. Even the help of the ascending Marlin oscillator proves ineffective. If we look at the market, we can all see that the dollar is strengthening, but yesterday the S&P 500 fell 1.11%. And if it doesn't rise, then the USD GPY pair will just move around the 130.00, 133.75 range. The range looks wide, but it would be dangerous to trade in it. In the current situation, we expect the price to overcome the MACD line 132.00 and will move to the target at 133.75. But it may not reach the level, as it happened on January 11. Green checkmark. On the 4-hour chart, we have an uptrend. The price is above the indicator lines. The Marlin oscillator is in a green zone. If the price goes under the MACD line 130.73, its attempt at climbing to 133.75 may not work out. We can expect the price to fall to 130.00. That's all for today. See you next time. Good luck.